Hi, and welcome to the market view for Friday, the 26th of September 2014. And immediately you look at this chart, you can see that the market's moved down 200 points plus yesterday. Just by looking at the grey psychological lines that we've got here, the big round numbers, you can see there the market trading through many of these down to 16,950 is where the market found support during yesterday's session. There are no PTPs or triple X's because the market is looking for a turning point, i.e. the market reverses, moves higher, fails, and then moves lower. On this occasion, in the pre-market, when Carney spoke, this had a reaction on the markets, and now you're seeing the downtrend already established in the pre-market, and then a continuation through the session. It's unusual. We've had 2 days of this, one to the upside and one to the downside. But like I say, it is unusual that we have this situation, but it is what it is, unfortunately, and that's how it panned out. However, on the bright side, I want to go back to the colourful bars that we have, the trading edge bars, the test bars, and just have a look at these areas that we have here. We've got the psychological level here, the big round number at 17,150, and you can see how the professional money was required to drive through this. We then see a continuation over the next 15 minutes, and then we see some buying support come into the market with the green bar at the next psychological level. The market goes through with some selling, and then more buying pressure comes into the market, so the brakes are being put on the market. They're attempting to try and hold the market. We've also got the support one in the pivot points as well. We see prices reversing, trying to come back above the 17,100, and then the market reverses. They again attempt to test the market, and then the market is just slammed again in this bar. We see the market coming off the lows as we go through the 17,050. The volume has increased as well. The market does its best to try and hold, and then it's forced through once again, and then through the previous day's low and down to the next BRN, which is of course 17,000. We see the market test. We get a huge volume of trying to bring the market back up, and on this occasion, as we go in towards the late afternoon, we see the market holding and retesting and holding all the way through. Each time the market is brought back through the psychological 17,000. This is a big number, as we've seen in the last couple of weeks. The market is then moved lower once again, and then because no one's around, it's late afternoon, the start of the early evening, you see the market free to just drift lower. We then see some selling coming into the market at 1730, and now we're down towards the 16,950, and we see the market then finding support once more and moving back up. The traders start to come back after their morning break in New York and lunch. We get a sell signal, but what you've got to bear in mind if you take these sort of sell signals is that in the background we already have a 200-point drop. Unless the market is going to move massively to the downside, i.e. 300-400 points, which is very rare, it does happen, but it's very rare, then you can't expect to take out your 20 points on a trade like this. And in particular, again, as we've just seen in the background, we've got the big round number, the psychological level of 16,950. So what is the market going to do when it gets down to this level? It's going to do precisely what it's done here, and that is find support. So you can take the trade, but you've got to be aware that there is going to be some support. Unless the market is selling off heavily, then you've got to consider what you've got in the background. The background is always important in any market, and here we've got this market having sold off, and then we see the market finding support. We got some selling here. The market's retested at this level. The market finds support, and then we have the reversal of the market moving back to the upside. So the maximum points that were available in this trade are going to be down to the 16,950 are going to be 15 points. So there was 15 points on the table there, but you've got to remember, as you've seen in all of these other moves in between the big round numbers, that the market finds support in these areas unless it drives through, which it will do initially, but as the market moves further down, you can see from the second one we start to find support. Eventually they drift down lower, and on this occasion here, if we just move the lines across so I can make it a bit bigger, we didn't get down to the 16,950 here. The market came back and then it hit it here. But in the background you can see what was happening all the time through the session. Even during the busiest time, the market was finding support at these numbers, and it's very important that you are aware of these big round numbers in the Dow, because with it being a small number of stocks, 30 stocks, the market is a lot more transparent in what it's actually doing. So we see the market move back up. It comes back up to the resistance to the left towards the BRN there, the next one to the upside, which is going to be 17,000. And then we see the market come back down. It's retested, and then just before the close, we have a buy signal there that produces the 20 pips. There's more chance of the buy side producing the pips and the points after a down move. And this is then followed by a sell signal, which of course is 20:55, which is 9 o'clock, which is normally too late. But again, you see there the market moving sharply lower and trading back down again towards that 16,950 area. So on the whole, a bit of a frustrating day, but there is a huge amount of information in the chart that you can take away to use in future trading, and that's the psychological numbers and the price activity around these numbers, and how you can actually play the market around these numbers as well. In the daily charts, we've got the straight reversal, which you can see. We've also got an increase in selling as well for yesterday. And on the overnight, you can see the market trying to reverse and come back now as well. And this is probably something to do with today's news. There's not a lot out today at all. Final GDP quarter on quarter for the US at 1:30 p.m. This is released before the market, and if it comes out at 4.6, then expect the market to rally as well. What you've also got to keep in mind as well, there's a bit of geopolitical issues in the background at the moment with this going into Syria as well, so it can play for and against the market to shake out the weak longs as well. So if the traders want to get rid of a few people because there is uncertainty with war, then they will mark the market down, which we saw yesterday before reversing it and moving back to the upside on the better than expected economic news as well. So I wouldn't be at all surprised if we see the market move back to the upside today if the figures are good, and also a decision is made to say, yes, we're off to war with Syria and we're going on this date, and that will give the market back its certainty that it requires at the moment. On the implied volatility front, we did see a massive increase yesterday of 2%, and again this is reflected in the price chart. The historical volatility also coming off those lows as well, which we last saw in July. Right, well, that's it from me this morning. All things are being equal, I will see you in Monday's edition of The Market View. Have a great weekend. As ever, thank you for your support, and also, more importantly, thanks for watching.